Hey guys, welcome back to another episode. Nvidia just dropped earnings, and we're going to take a closer look at what investors should know of the press release. Later today, I'm also going to do a deeper dive on the earnings call where we're probably going to learn a little bit more about the future guidance. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so right off the bat, as I am recording, Nvidia investors are pretty excited. The stock is up roughly 4%. If you jump into my Twitter account or X account, where you can see a few things right off the bat. Revenue was $26 billion versus expectations of 24.6. Earnings per share were $5.98 versus expectations of $5.59. And guidance was a whopping $28 billion versus expectation of $26.6 billion. So overall, a beat and raise. So here we're pretty excited for Nvidia. The other thing that did come out is the company did announce a 10-to-1 stock split. A lot of investors were wondering if we were going to get one, and they did announce a 10-for-1 forward stock split for their issued common stock. They mentioned this to make stock ownership more accessible to employees and investors. They mentioned that this will the stock split will occur on June 6th of 2024 after the market closes. So the next day, depending on your broker, you will get 9 more shares of Nvidia. So I'm pretty excited for there. Obviously, this doesn't really change anything in forms of the fundamentals of stocks, but I do like to see that I own more and more Nvidia. Stock split for me as a long-term investor, again, has no major change, but like I mentioned, it's just something that I was pretty happy to see. So like we can see, revenue, we saw that nice up 18% quarter over quarter and up 262% year over year. Another thing is gross margins on a non-GAAP basis was 78.9. We do kind of know that this quarter was expected to be the peak of this. We're going to see if guidance, what they tell us, is this going to continue? Or do they believe it's going to still be in the mid 70s after this market? So overall, the big thing is the data center market. The data center market, if we take a closer look here, was $22.5 billion and pretty much all of the revenue. Gaming was 2.6, professional visualization was 427. The automotive industry did go up a nice amount. This is the highest the automotive market has been since the past 2 years. So that's also pretty great news. We are seeing some traction here in the automotive market. Now, if we take a closer look, they continue to reflect higher shipments of the Nvidia Hopper GPU computing platform. So right off the bat, one of the weaknesses here that many were expecting was maybe quarter two, we were going to see maybe some form of softness of their data center products, as maybe customers were going to be waiting for the Grace Blackwell or the Blackwell platforms. But we saw from guidance that guidance did not really see that pocket of weakness. So quarter two, fiscal year of 2025 is also going to be a nice strength. Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode. Another great thing for them is their balance sheet. Cash and cash equivalents is now up to $31.4 billion, up from $15.3 a year ago and up from $26 billion a quarter ago. So overall, we can see that the stock is seeing a nice growth in cash. And this is something that I'm curious what Nvidia is going to do in the future, as they are building up such a huge cash position. We can see inventory was roughly $6 billion, and they do have purchase commitments, an obligation for inventory and manufacturing capacity of up to $18.8 billion and prepaid supply agreements of 5.6. So this company, right off the bat, we can see that they are expecting still high demand for their products. So they have huge commitments here. Not only do they have kind of hardware commitments, they also have about 8.8 billion of multi-year cloud service agreements as well. So again, overall, Nvidia continues to showcase that they're not just an AI hardware company, but they're a full platform, as we see their clouding solution as well. Now, cash flow from operating was $15.3 billion, up from $3 billion a year ago and up from 11.5 a quarter ago. Obviously, we see a huge growth here. The company also did increase, they announced a 150% increase in their quarterly cash dividend from 4 cents per share to 10 cents per share of common stock. The increased dividend is going to be equivalent to 1 cent per share on the post-split basis. Remember, we have a 10-to-1 stock split, so you just divide that dividend by 1. So Nvidia still barely giving us any forms of dividend, but that's okay. But we are seeing that they are kind of increasing that dividend due to that huge amount of increase in cash flow, due to that huge increase in cash balance. Now we can see that on revenue, we have that 28 billion plus or minus 2%. This was a beat overall. Non-GAAP gross margins were roughly are expected to be 75.5. Remember, the company mentioned that quarter 4 and quarter 1, which we just saw, was going to be the peak in gross margins. Now we're seeing a decrease here. Previously was because of some component costs that were favorable for Nvidia, but remember, that's because their products were getting older and older, so they probably tend to get better cost performance or buy them at a better price. Now with the next generation of chips coming, they probably have newer products, newer kind of components that go into these chips, so that kind of pricing power also decreases a little bit there. But overall, mid 70s are still expected, and for the full year, gross margins are expected to be in the mid 70% range. So who knows, maybe in the upcoming quarters we might drop down to the low 70s, but overall we can still see that the company still makes a lot of money from their overall earning solutions. So before I close out the episode, we can see Nvidia is still up roughly 2.5%. During the earnings call that we are going to take a closer look at it. If you are watching it now, I'm probably live streaming it right now, so make sure to take a closer look at that. But overall, results were pretty exciting. Again, it's all about the data center market. And if we look at anything else, let's see at CFO commentary here. A few other things, they mentioned the Blackwell platform is in full production and forms the foundation for their trillion parameter scale generative AI. Spectrum X, which is their network solution, also is improving, and also they're increasing their software solutions as well. So this is the quick video I have on earnings. Like I mentioned, make sure to follow me for my live stream. Take care, have a good day, and see you all next time.